This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Top oil exporter Saudi Arabia on Sunday cut the February price of its flagship Arab Light crude to Asian customers to the lowest level in 27 months, a company statement showed, amid competition from rival suppliers and concerns about supply overhang. Saudi Aramco slashed the official selling price, OSP, for February, loading Arab Light to Asia by $2 a barrel from January to $1.50 a barrel over Oman, Dubai quotes, a level last seen for November 2021. The price cut, the biggest in 13 months, is in line with market expectations, as refiners called for competitive prices from Saudi Arabia comparing to crude oil supplied from other Middle Eastern producers and the arbitrage cargoes from the Atlantic Basin.
Recent hostilities in the Red Sea have thrown global shippers of vital goods for a loop, but it is hardly the only issue that big carriers are facing as 2024 kicks off. Giants like Maersk say the industry, which handles 90% of global trade, faces the possibility of significant disruptions, from ongoing wars to droughts affecting key routes like the Panama Canal. Complex vessel schedules are likely to be knocked out of sync for giant container ships, fuel tankers and other commodity haulers throughout the year. That will increase delays and raise costs for retailers like Walmart, IKEA and Amazon, as well as food makers such as Nestlé and grocers including Lidl.
Moving on to the top news in the energy sector.
Oil prices fell by more than 1% on Monday on sharp price cuts by top exporter Saudi Arabia and a rise in OPEC output, offsetting worries about escalating geopolitical tension in the Middle East. Brent crude slipped 1.09%, or 86 cents, to $77.90 a barrel by 0344 GMT, while U.S. West Texas Intermediate crude futures shed 1.15%, or 85 cents, to $72.96 a barrel. Saudi Aramco slashing its February OSPs bolsters the weak demand narrative, said Vandana Hari, founder of oil market analysis provider Vanda Insights.
India's fuel consumption rose to a 7-month high in December to about 20.054 million metric tons, data from the Petroleum Planning and Analysis Cell, PPAC, of the Oil Ministry showed. Total consumption, a proxy for oil demand, in December rose by 6.2% from 18.89 million tons in November, data showed. It was up around 2.6% compared with the same period a year earlier. Sales of diesel, mainly used by trucks and commercially run passenger vehicles, rose by 0.9% month-on-month to 7.60 million tons. Sales of gasoline in December slipped 4.5% from the previous month to 2.99 million tons. Next, we have the top news in metal markets. The U.S. Commerce Department said on Friday it found that imports of tin mill products from Canada, China, Germany, and South Korea are being dumped onto the U.S. market, and imports of tin mill products from China are also being subsidized. The department also found that imports of tin mill products, a shiny silver metal widely used in cans for food, paint, aerosol products and other containers, from the Netherlands, Taiwan, Turkey, and the United Kingdom are not being dumped, it said in a statement. The department said on Friday that the highest final anti-dumping duties of 122.5% will be imposed on tin mill steel imported from China. It also imposed countervailing anti-subsidy duties of 650% on tin mill products from top China producer Baoshan Iron and Steel Company Limited and 331.9% on all other Chinese steelmakers.
Iron ore futures prices extended declines for a third consecutive session on Monday as some investors unwound long positions to cash in profits amid contracting demand and steel margins. The most traded May iron ore on China's Dalian Commodity Exchange fell 1% to 993 yuan and 50 fen, $138.93 a metric ton, as of 0215 GMT. The benchmark February iron ore on the Singapore exchange was 0.71% lower at $137.06 a ton. Its expected hot metal output will hover at a relatively low level, with many mills still suffering losses, which will weigh on demand for iron ore, analysts at Suchow Futures said in a note.
We will now look at the top news in the agricultural sector.
Brazilian soy exports will reach at least 1.3 million metric tons in January, a sharp increase from the 940,000 tons exported in the same month last year, according to projections released on Friday by ANIC, a grain exporters group. Brazil starts planting its soybeans around September and normally harvests the crop in the first 2 months of the following year. Dry weather, however, delayed some planting last year and will affect the harvesting of the 2023-2024 crop. ANIC said in a statement that shipping schedules indicate soybean exports could be as high as 2.7 million tons in January. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.